Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I got Machinery Pete back on to talk about what's happening in the marketplace. Greg, how you doing today, bud?
I'm doing well, Casey. How about yourself?
Not too bad. Are you getting this warm blast up in Minnesota, or is it still cold there?
Oh, it's beautiful. It's low 50s today, so we went, I think, 100-degree temperature difference with wind chills in the last 10 days. So, nothing new for Minnesotans.
Yeah, this so same thing here. We had negative degree temperatures over the last couple of weeks, and then I think today's high is 65, but we can't get 65 and nice. It's got to be 65 and like 65 mile an hour wind. So everything it all works out, it's all a ratio, right?
We get close to March and it gets warm like this. I always think of muddy auctions and try not to get my pickup stuck because I'm in Tennessee or Minnesota or Wisconsin or wherever. But yeah, it's that time of year, isn't it?
Yeah, every day's a different day. Just wait, and the weather will tell you so. All right. Well, I figured today, Greg, you and I could hit on what we see happening in row crop tractors. And when I say row crop tractors, I'm talking about 175 horsepower plus tractors and how those fall in there. A lot of people are saying like, well, why would you put 175 horsepower as a row crop tractor? And that's a great question because you're not doing a lot of row crop work with 175 horsepower tractor. But a lot of those tractors that you see that are in that range are also supplemented into different parts of the farming operation that mirror what's going on a row crop farm. So as you're looking at what's going on, supply and demand data is out there that shows, you can kind of go back, and I'm a history guy. I love to go back and talk about how things got to where we're at. And if you look where things started out in 2020, right before, when COVID, hit, and then how things slid as far as supply goes and how fast demand went up, row crop tractors they're always the first thing to get swept off the shelf, and they're always usually one of the last things to get put back on the shelf. But this year was a little bit different. This time was a little bit different. We saw the slide to 2023 where basically half the machines that were out in inventory as far as supply goes were taken off, and it hit January, February of 2023 was about the low mark of where those machines are at, and then they rapidly filled back up as orders started coming back in and demand started to slide. And we're back to about now where similar numbers we saw pre-COVID as far as overall number of tractors out in the marketplace and those kind of things. But it feels like to me, as I watch things happen, conversations I'm having with people, that the 2024 order writing period for 25 delivery obviously was off, and you're seeing some contraction of supply because there's not that much coming back in. I hope I could tell you that more stuff's coming off, but there is some stuff coming off that's just not necessarily coming off as fast as what folks would like to see. But I think that's going to accelerate as we go into 2025. Before we started recording, Greg, you're talking about a sale you're watching here today, and you were talking about some pretty strong auction numbers. So I guess as you're looking at that tractor marketplace, what are you seeing there, and what's some of the data you're coming up with?
Yeah, I think, it just feels to me like, and the auction pricing is pretty clear on it, Casey, pricing is going up a little bit just here recently the last few weeks. So obviously commodity prices a little more bullish. We flipped the calendar. You always give people a little time to reset after the holidays. And you mentioned this couple sales today I'm watching. One was by Sullivan Auctioneers, of course, with Big Iron. They had an online retirement sale for Ronald Small in Monroe City, Indiana. I'm sure probably all listeners were watching that today. And wow, those prices, I'm telling you, just for a few highlights, they had a 2017 John Deere 8370R. Low hours, very low, 383 hours. So expect a premium, but nonetheless, it sells for $291,250, which, when you're the scorekeeper, like I've been for 35 years, that's the highest auction price since December of 23. Mm-hmm. So you're pushing towards a year and a half there, which, like you said, that times back to, when the inventory situation was different. Right on down the line on this sale today, they had a 2014 John Deere 8360R 662 hours again, so very low hours. You expect a premium, but it sells for $249,000, which is the sixth highest auction price ever on an 8360R. And same thing, highest on this case, highest auction price since December of 22.
Yep.
Which our data shows December of 22 was the absolute peak of auction pricing. We also had an 07 8430, so now you're getting pre-def, low hours, 2,217 hours. That brought 190,250, highest auction price since January of 23. If you're talking four-wheel drives, how about an 07 John Deere 9620? Sharp rig, 1,860 hours, came in at 185,250. Exact same thing, highest auction price since January of 23. So, it's over 2 years. And it was interesting, even the combines I thought sold really well on the sale today, Casey. They had a 21 model X9 1000, 1,111 engine hours. That brought 385,750, which anytime I post pictures of these X9s, what they sell for at auction, people say, oh my God, that's so much off of retail price. And it's like, well, we got to remember, this is 4 years old now, this 21 model. And when you tear the auction prices apart, that's the highest auction price ever on an X9 1000 with over 800 hours engine hours. And this one had 1,100 engine hours. And then they also, kind of an unusual deal, they had a New Holland combine, a 23 CR 1090 with only 490 engine hours. No heads, hard cash, that brought 372 and a quarter today. And that set a record for the highest auction price ever on a New Holland combine anywhere ever. So now this was the right stuff, low hours, which is what everybody wants. But, I think what we've been seeing on the auction market is just a little shaking loose of the purse strings a little bit. And we talked about it last week, that pullback in new sales in 24, early 25. I think people are starting to sense a little bit. I've been talking about it for a few months now, but it's like, I think you have to be careful of assuming the slow play out like we've seen in other downturns in terms of used equipment supply, because, dealers were so aggressive the last 18 months pushing stuff out to auction. And I wonder a little bit, curious to get your take, but given these stronger prices now, I wonder if that will jar dealers to maybe they've been kind of holding back maybe since the fall, I thought, with volume, taking stuff out to auction. They took so much out.
Yeah.
24 kind of took a breather there. I wonder if this will make them kind of be more aggressive spring into summer.
Yeah, I think there's probably some of that. You're gonna see some folks that just kind of sit back and look at some of the stuff that's there and say, hey, prices are a little more advantageous for us right now. One thing I've been talking about and thinking about here with some folks I've been working with, this feels a lot like 2008, 2009. If you go back and think about that, coming out of the Great Recession, the manufacturers kind of pulled back a little bit from manufacturing, and the lead times got a little bit longer, and there was a little bit of a delay in getting some stuff out. And if you look where used equipment fell in at in 2009 and 2010, that was the catalyst that kind of kicked off that 2010, 11, 12 run that we saw where used equipment prices really jumped up and ran. Because really at the end of the day, it was, if you had some late model, low hour stuff, that was kind of your choice. If you wanted to go out and buy something, there wasn't a whole lot of stuff out there to do that. Now the dealers were putting in the orders, manufacturers just kind of slow to get things ramped back up after coming out of the Great Recession. Similar thing we're seeing now, right? But now you got both of them a little hesitant, right? Dealers are a little hesitant to go get a whole lot full of brand new stuff, and they got a whole lot full of stuff already. And the manufacturers have pulled back so far that it's going to take a while for them to get ramped back up. And as you're watching this unfold, kind of like what you're talking about here, Greg, I think as we watch 2025 progress into 2026, we're going to continue to see that used equipment space get a little more healthy, a little more strong. We're going to keep things moving along and keep things bouncing in that direction where we're going to see a higher and higher price points move together. Now, one of my favorite conversations to have with somebody, just like you talked about, was, hey, this X9, this or that, that, the other thing. When you start looking at a combine that's got 1,100 engine hours, 800 separator hours, 1,000 separator hours, something like that, that's when you've kind of hit that point in time when you're at a peak depreciation is what I like to kind of talk about. Like you've hit you're past the first A buyer, you're past the B buyer, now you're kind of into that C buyer range where the person buying that is wanting to buy that 1,000-hour machine, 750-hour machine, something like that on the separator. Same thing on row crop tractor. That's when you start seeing those guys that are really hungry for that 3,500-hour row crop tractor, that 5,000-hour row crop tractor, somewhere in there, because they're trading their 7,000-hour tractor down to this. And as those things roll through, that's kind of the first thing that you start to see that really churns the used equipment marketplace, is that particularly less than $175,000, $200,000 something. And we start looking at some combines under, now it's moved a lot in my career, but it used to be under 200,000, now it's under 400,000, as those
Right.
things kind of churn along. But
Right.
as you watch that stuff churn, you're starting to see that now. The market, that thick mud at the bottom now is starting to kind of break loose and churn a little bit. And that's what we're starting to see. And that's why I think as you watch 2025 progress through, those price points are going to start to come together with the supply and demand curves, like we were talking about earlier, and what those look like and how those things are coming together. You're going to see a lot more of that get a lot more stable, a lot more strong. And as those things progress into 2026, again, I think you're going to see some flow in demand as far as ordering new goes, and it's just going to continue that on because of, again, whether you order it and it shows up late type of thing because of order times and those kind of things, what that looks like, it's going to continue to keep that used equipment strong. So I think we're in that, the lights at the end of the tunnel, I guess is what I'm saying. We're starting to see some of those markets kind of shim up here a little bit to where they're getting a lot more true.
Well, I'm so glad you're a history buff, Casey, because your observations there make me think back. You mentioned 2008. So I first saw it mid-November of 2007 when it was ethanol, of course, exploded.
Yep.
And the thing about the auction market is, I mean, it's day by frickin' day. So when farmers feel more bullish, man, it shows up instantly.
Yep.
It always takes longer when the market goes down. I always thought for the catch-up phase, but when it goes up, it goes up like a rocket ship. So I remember being at Commodity Classic, like March of 2008, at a manufacturer dinner, one of those media things. And by the way, it had probably the best cheese plates I've ever had. But I remember sitting there, and like you mentioned, at that time, the manufacturers had shut the faucet off because of the Great Recession. All corporations were freaked out about inventory, so they just shut the spigot. I remember being at this in Commodity Classic in 2008, talking to these OEM people and saying, I don't think you guys even know internally the pricing power you guys have right now. Because I was watching just this explosion on the auction side, hard cash. And that's now that we went through that, decade and a half ago. And just like you said, that's what we've been talking about is these boom and bust cycles, but I think they're tightening up.
Yeah.
And so if this continues, and I don't like to predict, I like to report and draw correlations on what's happening today. But I mean, the data, the pricing is strengthening, and it's, you can almost see it begin to happen again where, when that pipeline of new shuts off for a good enough period of time, and we begin to work through this excess of used, which we have for a year and a half now. Is it all roses and everything? No, but is it better? Yes. And again, when you start to see these auction prices strengthen, to me, that's like, be careful if you're a farmer, needing to update that tractor and thinking, well, a year from now, I'll be in the driver's seat 18 months. Maybe, but the data wins are starting to paint a different picture is what I'm seeing.
Yeah. And I agree with you. I think I've been talking about this, since about midway through 2024, where I felt like 25 was going to be a year where we started to see things true up. And another thing too, if just you talk about boom and bust and the cyclical nature of this business, if you look at how things go, there's a 10-year span, right? You have a decade in there, and you'll have 3 years of really good times, and you'll have 3 or 4 years really, really good times, and you'll have 3 or 4 years of really, really bad, cleanup time, and then you'll have another 3 years where things kind of come back out of where we're at. And I kind of feel like that's where we're at, right? We've gone that. If you look where we're at, we had a 20 to 23 were pretty good times. And if you look at where 24, 25, 26 will be some cleanup time. And then we're going to have this next, 4 years after that as we go into the 2030s and what that looks like. And it kind of feels like they were in the same kind of cycle. But to your point, they're not nearly as drawn out like they used to be, right? Like we had that one, 2012, right? If you really go back and start thinking about like, when did the market start to take off and run, 2006 through basically 2014, that was kind of a boom period, really. Ethanol was part of that and those kind of things. But as you watch those things transgress, it really wasn't until the last 3 years of that boom that things really took off and ran. And it just seems like now when you go into these ups and downs that we're seeing happen, they're very compressed. And even on the backside of that, even some of this downtime is very, very compressed. But the backlash that comes from those times during that less compression period is very big, because you start looking at 40% swings and 50% swings in the cost of equipment over a 3-year period. That makes a big difference in what that backlash looks like as it comes off the backside.
Oh man, no kidding. I mean, I think I've written, people who followed my column for years know that I like to write about timing, not just in life, but I mean, do you catch the glance of the girl you're trying to catch your glance back in college? It's timing,
Right.
But the dollars are so big now on the equipment side, both new and used, that, if you compare back to 2008, or I go back, 96, auction prices went sky high, corn was high. And then, like you say, though, those down periods were longer. So 97, 98, 99, 2001, 2, that was a long stretched out period where really nothing was sparking. But so that's why, farmers are very smart. I mean, in my book, there's no smarter business folks to survive the ups and downs they've gone through over the decades. Their dad and grandpa and uncles and grandmas, they're smart people. And I think in their gut, they know that in these swings, that's where the opportunity lies. So, if you could have been a buyer last summer or fall on a nice 5 to 7 year old low hour high horse tractor like we're talking about here, or a combine or a sprayer, you're going to wind up probably looking back, and you can do that in our Machine Repeat auction prices. You can look back. I tell people, it almost make you want to vomit. But if you go back and look at what all these 3 to 5 year old tractors were selling for in 15, 16, 17, low hour.
Yeah.
Now, people's checkbooks were tight then. And I'm not saying it was easy, but that's when to be aggressive, when everyone else is pulling back. That's when you make your fortune, in my opinion. And I think any market, you look at that. It's like the stock market. Tried to teach our 2 daughters that, when everyone else is freaking out and pulling back, you're like, hey, cool, everything's on sale. Awesome.
Right.
Now, and then flip it when you're trying to sell. Timing markets is tough, but I don't know if I shared this one with you, Casey, but so I mentioned December of 22, our auction data shows that's the highest I've ever seen. The previous high was like March of 13, like you said before.
Mm-hmm.
Okay, December of 22, it was December 5th of 22. I'm in Hamlin, Iowa. Retirement sale, guy named Dwayne Sundberg. He's got all the John Deere 20 series tractors, the 81, 20, 82, 83, 84, 85, lined up. Beautiful day. The 8220, like $3,500, sells for $182,000. Right after it sold, I'm filming it with my iPhone, and we were there shooting it for the TV show. Guy taps me on the shoulder. I turn around, I sort of half recognize the guy. And he had purchased a much lower hour 8220 November of 19 sale in Williams, Iowa that we shot for the TV show. Now he paid $117,500. So that's timing. He got it $117,500 and he just watched one with twice the hours go for $182,000. That's life.
Yep. And that's the cool thing about, one of my mentors early in the machinery business always told me, you make all your money when you buy it. And that was that rings true, because you watch a lot of equipment get sold at the peak when and then this kind of stuff happens, and you see 20 or 30 or 40% in some cases of additional depreciation get pulled back off that machine, just because of like talk about the scarcity premium. That was one of them. You had this extra additional stuff put on top there that was because the scarcity of equipment, and then you had normal depreciation anyway, and that all comes off. I mean, some of the stuff, you bought, I'm just going to use round numbers here. You bought something for 300,000 and it, depreciates 40%, you're looking, and you paid, 300,000 for it. It's kind of a hard pill to swallow when you go back in and talk to your dealership. It's like about, trading again, but
Right.
that's just the market. You know what I mean?
That-
And
That's timing, right?
yeah. And unfortunately, just like you said earlier, it's a day by day on the auction market. It's a commodity, just like corn or beans or anything else is, man. It's what somebody's willing to pay for it that day, and that's ultimately what it comes down to.
Yeah, it's one of the other tractors that sold today was a sale out in Nebraska that I was watching. My friend Adam Marshall, Land and Auction, had a nice sale. A couple things here. He had a 10 model John Deere 7930, so it's pre-def, so there's that whole thing. But 4,125 hours, so it's not like 1,100 hours.
Right.
But it was very nice. 4,100 hours, hard cash, sells for 118 and a quarter.
I know, man. That's amazing. I've watched so many of those sell like that.
So now it's interesting because that's the second highest auction price
Yeah.
ever, 7930, over 4,000 hours. But we talk timing. So the only one ever that sold higher, December 9th of 22.
Yeah.
That's like we said, December of 22 was the absolute top.
Yep.
And so now that does bring up a point. This was an online auction, farm auction. And I could see, we talk about this whole used equipment space. So March here will be 5-year anniversary of COVID and the pandemic. So I've been in the 35 years I've been doing this. Mid-March of 2020 was probably the most amazing couple of weeks I've ever seen. So it was the busiest auction month in North America, and most auctioneers are older than me. I thought we're going to have all these cancellations. Nope, the whole space leaned into online only. Now, price of corn and beans didn't go up till the fall.
Right.
Auction prices went up instantly. There was no reason for it other than we all live on these cell phones and we're stir crazy and whatever. But I wrote a blog, Casey, at the time, and I said, I think we just yanked the used equipment market forward 7 to 10 years in one shot. And there's no going back. And this is what we're talking about, the speed of the market. It's not so sticky now. It's not so drug out and slow. It's more used equipment market, a little bit more like the used automobile market.
Yep.
Which was very unemotional. If that stuff sits on the lot too long, screw it, sell it, get it out of here. And so I think the growth of online bidding, and a farmer up where I live in Minnesota can click a button, doesn't think anything of it, buy a tractor out where you are now, Western Nebraska. And that's a great thing for the space.
Yep.
Great for dealers. It's good for OEMs. It's obviously good for farmers when they're selling equipment, more efficiently bringing buyers and sellers together. But again, 5 years ago is when, to me, it really started to really change.
Yep. Yeah, it's amazing to watch how many online auctions there are now, right? When I
all
first
over.
started doing this, it was Big Iron, for example, was one of the ones that comes to mind early. And I was like, you guys are, why would I do that? And
Right.
then, I need people to come look at it,
Right.
and
Right.
here we are, like, why would I, having a live, I love going to live sales, are great, but it's that marrying of, visual eyeballs versus virtual eyeballs. And those are, it's amazing how much more confidence people have now in buying online comparatively to what it was, like you talked about 5-7 years ago.
Well, the thing too, again, I remember standing at a sale in Kansas, farm auction, January of 2010 by Stock Auction, of course, Big Iron. So I've known Ron and Mark Stock, great guys. They own Big Iron, known them for years. And I remember interviewing Ron after the sale and saying, Ron, this thing you started, Big Iron, online only. That's quite a, and he just smiled and he said, Pete, we just think it's the future. Now, in that case, you run across people sometimes who are so far ahead of the game that they're just unique that way. But here, since COVID, what we've been seeing, Casey, is, sharp young people, a lot of former salesmen or mechanics at dealerships that are really good with the clients locally. Everybody loves them. They'll split off and start their own auction company.
Yeah.
an online auction company like Joe Schmo Auction or whatever. And it's God bless them. It's awesome. Now, the reason they can do that is because we went through the pandemic, we all went over that hurdle together, like you described. Like, why would I click and bid on something in Kentucky? I live in Minnesota, but we all jumped over that hurdle at the same time.
Yep.
So now if you put up your shingle and do an online auction company in Pennsylvania, the only thing you got to do is get eyes on it. And that's hopefully where we can help with Machinery Pete and everything we try and do. But it's been amazing to watch that change over the years.
Yep. The online auction is the podcast of the media, I guess, basically a way to put it, right? Everybody's got a podcast. Everyone's got an auction company too, right? So there you go. Right on. Well, good stuff, Greg. It's probably a good place to stop. Glad you could be on the podcast with me again today. Go to machinerypete.com. Check you out. If folks want to get you to come speak at their event, what's the best way to do that?
Oh, maybe just reach out right on our website on the bottom. There's an email link that'll get you right into our office. We got great people there, Dan and Ann and Sean, and that email gets through to me really quick. So if you got an event coming up, and I love coming out to speak. And a little secret, Casey, anytime I go out to do that stuff, I always come back with like 10 stories. People share their local stories. I was in Glencoe, Minnesota a couple weeks ago speaking at a Minnesota or McClatchy corn and soybean grower event. And a guy came up afterwards with like the most amazing international harvester collection ever. He showed me a picture of his 1460 combine. It was the nicest 1460 like I've ever seen. And so I'm excited to go up and do more video with them. But no, it's great fun to go out. So just drop a note. And again, just thanks for everyone for, following our stuff and listening to the podcast and watching the TV show. We sure have fun putting it all together.
Right on. Greg, appreciate you being on. We'll catch you again next week.
You bet. Have a great week, Casey.
Right on. Stay tuned for Sean Hackett to talk about what's happening in the commodity market, and we'll be back here in just a minute.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Hello, and welcome to Moving Iron Podcast Markets. I got Sean Hackett back here to talk about what's going on in the marketplace. Sean is with Hackett Financial out of Boca Raton, Florida. And he's nice enough to come on and just talk about what's happening in the world of commodities. Sean, how you doing today, bud?
I'm good, Casey. Really, really good.
It's almost Florida hot here in the Panhandle of Nebraska. But we have 70-mile-an-hour winds, just typical breeze here in the Panhandle of Nebraska at this time of the year. So lots of stuff going on. You talked about this a little while back on your weather stuff, that there was going to be this incredible cold snap, which we saw, which everybody I think on the planet got a cold snap, and then there's going to be this sudden atmospheric warming event, and I think that we've got that now.
Well, we were really, really confident that at least the first half of the winter was going to be super, super cold. It wound up being a little longer than that. But that you would have a very, very warm finish, which we're now getting into right now. And it's going to be very, very warm for the most of March, I would say. We're just going to have some pretty warm weather. But if you remember that we felt that we would have a late ending winter, meaning that we'd have winter conditions come back in the spring, especially for the months of mid-April to mid-May. We went over various variables, but one of the variables that we had been looking for that is a really, really takes it up another notch is to get a sudden stratospheric warming event that you mentioned going on in the atmosphere. And we are in the middle stages of developing what could be one of the top 5 strongest sudden stratospheric warming events we've seen in the first part of March. And for those that don't know what that means that above the North Pole, the stratosphere, which normally is super cold, and it's contained in this very spherical oriented structure, that gets displaced, and you get this extreme warming above the North Pole in the stratosphere. And when that happens, then the entire stratosphere gets unstable and starts to lose its cohesiveness. And the typical delay from peak SSW event to when that tends to translate into a cold push either into North America or into Russia, Ukraine is approximately 45 days. So if you run that correlation through, it takes us through that the starting point of when we would expect to see this SSW event have an impact on cooling down our planting season as well as in Russia, Ukraine starts in mid-April, and it tends to carry over for 30 days or 4 weeks where you have the potential for some very cold, wintry type of weather that can easily bring in a hard freeze. So definitely the final signpost that we wanted to see. As you know, Casey, we're very big on trying to add one after another and seeing if we're continuing to be on the right track. If we had to dial in what gives us the maximum confidence possible for our forecast for a cold spring, this development that's now verifying, it's going to happen. We're having an SSW event that's very strong. This is it. So we're very comfortable that should create a considerable amount of unfavorable planting season, either in delayed planting or planting that gets done and gets frozen over and replanting. Winter wheat frost as it comes out of dormancy. These are all things that the market's not going to like, especially with wheat and corn supplies in exporter hands being some of the tightest we've seen in at least 10 to 15 years, if not longer. So that part of our forecast, I think we started talking about this, Casey. Shoot, I don't know, early fall, something like that.
It's been 6 months. For sure.
So so this long range forecast, we couldn't be more confident. That doesn't mean it's 100%. Nothing's 100%, or as confident as it could possibly be, given that this is now happening. So that's really the next big catalyst that we see for the grain markets. Is that it was a catalyst last year, and it could offer a tremendous cash selling opportunity, not only for the old crop, but maybe even for the new crop that's coming along. So we'll have to watch that very closely and see what markets do and what kind of opportunities present themselves. But certainly the thought process that the North American ag economy is dead for 2025 seems to have been over embellished back in August and September. And while we're not expecting boom times for U.S. agriculture, we think if producers are proactive, it's not going to be that bad of a year. We think the farm economy is going to be fine.
Yeah. Okay. All right. So you brought up something I want to talk to you about. We talk about a lot. Talk a lot about the wheat to rice ratios and what that's looked like, and we've seen some countries that are, South Central Asian countries and India, for example, and some countries like that, where you've seen some government supplies start to slide back in to kind of offset some food inflation that we're seeing happen right now. Everything's tight right now. The rice market is a little bit not as tight as some of the other things are, but it's dwindling fast. So I guess, Sean, as you look at those ratios right now, what are you seeing, and how do you think what you just talked about? I mean, is this something that could be a bigger deal than what most people are probably anticipating right now?
Well, let's reverse back just a little bit. 2 years back, when India had a really, really rough couple of years of growing season, their rice supplies got super tight, and they actually put an export ban on rice exports, if you recall. And that kind of set the rice market off really, to some pretty high prices. And we got a very high rice to wheat ratio, meaning the price of rice a few years back was very high relative to wheat. And, what do? Well, it's more profitable to grow rice. So you put more acres in, you take care of it more, you put more fertilizer down. And India had a very good growing season last year. So they've loosened the noose on this, and they're starting to sell some of their rice into their own local market to ease some of the inflation. And some of the other countries are doing the same. So the rice price is starting to fall, and that rice ratio in terms of its overvaluation is starting to calm down. So sometimes rice leads wheat, sometimes wheat leads rice. What we foresee coming up now is, so the rice price is adequate. I mean, the rice supply is adequate. But when we look at what's going on in India, remember when India grows their wheat during the winter time, they're having terrible weather again for wheat. Wheat is in an export ban. It continues to be an export ban. And they're actually, looks to me like they're getting ready to import a lot of wheat into the country. They were hoping they were going to have a good crop this coming season. And as I stand here in mid to late February, they've had extremely dry weather. Their reservoirs for irrigation are at some of the lowest levels that we've seen in modern day times. And now some heat's coming in. They're going to have another very poor wheat crop. And so the way I see it, given what we just said about the winter, about the spring having a winter type condition here in the North America and in Russia, Ukraine, the wheat market, in my opinion, is now going to start to increase relative to rice, showing a greater undersupply. And we're going to start to see the wheat market impose its forces on the rice market, exactly reverse from what happened a year or two ago. So I'm super optimistic that one needs to keep looking at winter wheat prices as a whole. I continue to believe that we have a situation where the Russian wheat price continues to go up. The Russian ruble is starting to go up. We're getting more competitive, and we can ill afford anything, another hiccup here in major wheat producing areas. And I just mentioned India and Russia, Ukraine, from what we've seen already, that their crop's in terrible condition. And our crop is suffering from a lot of unfavorable drought and some winter kill. I just don't see that we're going to get the signal that the market's looking for. And so I would really be watching the wheat price start to move higher. And it's been starting to do that. And to watch this rice to wheat ratio continue to go from overvaluation to undervaluation. We actually did a study, Casey, as you know, I think it was going back 1,500 years, about the price ratio between wheat and rice and how it constantly is going back and forth in this modulus of elasticity. And, when rice is here and wheat is here, it's inevitably is going to start to go the way. And we're right now just starting to do this. So the wheat market's definitely, in our opinion, the ag market to watch as we go through the spring for all the reasons just mentioned.
Right on. All right, so we've seen, corn this week's taking a pretty good smack in the face compared to where it's been since basically the election. You've seen it slide off. I don't know. It's probably off about 20 cents or so, 25 cents, something like that. If you go back and look and see where things are at, and if you're watching how the corn price is moving, most of this has to come from the news coming out of Brazil that they've gotten some rain in some pretty dry areas where they're at. I guess, Sean, so as you look at corn and soybeans both, what are your thoughts there, and what do you see happening?
I kind of feel, and I think we said this a couple of weeks ago, last time on your show, that I think the corn market, old crop prices being the July price, I think it's fairly priced for where we're at. I think that's where it's like where we should be. The problem is that if you talk to farmers, if you talk to seed dealers, you do any comparative analysis of the price of corn, the economics of corn relative to other ag markets that could be planted in place of it, corn wins out in every single case. And it looks to me like the planting intentions report that will come out at the end of March is going to show a very, very large number. The market is thinking 93, 95. I think they're just completely missing the ball. It's going to be well over 95. I think it could be 96 million plus that we intend to plant. So it's hard for me to see that the corn market, being that I think it's more than fairly priced here, is going to want to take out the offers and really take off and move to the next level higher when we're about to tell the world that we want to plant the largest number of acres we've ever planted here in the United States. And while weather in Mato Grosso for second crop corn isn't ideal, and no, they're not going to have a top end crop, it probably is going to be, like I said, off, but better than last year. I'm not sure that moves the ball forward to the upside. I just think with the speculators so heavily bought in here, this is going to be a temptation to take some profits off the table the closer we get to the planting intentions report. And that just says to me that this pause that you've talked about, this give back here, we probably have further to go, before we kind of reset the market for the spring planting season. Because once we start getting delayed planting or plantings that have to be replanted, and we start seeing cold weather, and we start seeing that the crop that has been planted isn't emerging on time, and the growing degree days are away. I mean, that's going to start to quickly shift the bearishness over the planting intentions report. But we're not going to come to any of those conclusions into the first part of April.
Right.
That's the risk point for corn prices to come down. And that still is the forecast that we see. How far we come down, a 50% retracement. If you look at July corn, just let's make it nice and simple. We went from $4 to $5, right?
Mm-hmm.
A 50% retracement of a rally. Not that that's set in stone, but that's not an unusual correction to occur midstream in an ongoing move higher. So that would mean something like 450, 460, 465. I mean, somewhere in there, it wouldn't surprise me if we had enough speculative selling, to kind of get us into that window, and then get ourselves set up for the chaotic spring planting season that is to come.
Right on. Okay, last thing I'll talk about is the cattle market. Just about when you think the cattle market has hit the edge of the cliff and it's going to fall off and the cattle market's just going to go completely downhill, it rallies back quickly. And that's what we've seen here this week and late last week. So, Sean, looking at the cattle market, we've talked about this a lot. The way the economy was, inflation, everything else that we had coming on our way, just the headwinds that were ahead of the cattle market was just easily overcome by herd size. So I guess as you're looking at the cattle market now, your thoughts as we head into what should be, grilling season here, not all that far away.
Well, remember, we first rallied the market on this disease in Mexico, and we're not going to bring this cattle in, and then we think we've gotten that taken care of, and it looks. Then we rallied the market when Trump first said he's going to raise tariff by 25%. They said, well, not quite yet. We're going to give it 30 days, and then they sold off hard. And then he says, well, actually, I was serious about that. We're going to put them back on. We're actually going to do it next week. And now they're starting to put some price back onto the cattle market. So I don't know, Casey. When you really get down to it, when you get done with all of what I just said, it hasn't done much at all. It's just been,
back and forth,
and we're just kind of just going. If you look at a chart, it's just going sideways. In this frenetic zone, we are holding. We are retaining heifers. We are trying to rebuild the herd. That's going to hold supply back, especially in the back half of the year, unless demand in the U.S. completely collapses due to recession or hard landing. It's hard to see that that's going to be that we're going to be able to really knock the market down if those animals available to the market are going to be thinned out. We've already so dramatically increased weights per head in the last couple of years, like our efficiency is like off the charts. I never will ever bet against the ingenuity of the U.S. farmer. I'm always believe they can do more, but they've done enough for now. I don't think we can do much more on the weights. And if we have a cold spring, and we have a wintry finish, and we have some frost, calving season's not going to be is not going to be looking very good. And so then you add another element of supply constriction that if you don't have a good calving season because of a cold wintry spring season. So when you throw all that in there, the only way that I can foresee that the cattle price materially breaks down from here is we just go into a really, really nasty spill contraction. The stock market's down 20%. Everyone is crawled up in a ball, and no one's going out, and everyone is being laid. We'd have to have a really serious economic situation going on, and then absolutely enough demand would come off high priced beef to probably knock the cattle market down. I'm not saying that cannot happen, but that's the only thing that I can see that would do it. We're starting to see some numbers accelerating to the downside. The stock market is getting more unstable. The bond market has been rallying. The interest rate has been falling as a flight to safety. We've been seeing some kind of some early signs that maybe the market is starting to worry a little more about this economic picture. The tariffs, whether they're good or bad or indifferent, in the short term, it just increases the cost for everybody. And that's probably not good for consumer demand, which is already under a lot of pressure. So all that being said, I think the cattle market should hang in there. The only thing I can say is if you see that stock market, usually if you're down by more than 15%, whether it's the S&P 500, the Dow Jones, the NASDAQ, pick your stock index of choice. But if we start moving below 15%, that's the stock market signal that they believe we're going into a recession. That's when the cattle market could start feeling some vertigo. And until or unless that happens, I think the cattle market will hang in there.
All right, Sean, good stuff as usual. Folks want to reach out to you, get more information about Hackett Financial. What's the easiest way to do that?
Our website is Hackett, Hackett, advisors.com. We also have a Twitter page at Fairnix11. Every once in a while, we put some things on there that might be of interest that goes over our cycle statistical correlation, not just in grains, by the way. We also talk about soft ag markets like coffee and things, but it's a good place to go to see if how we look at the world in agriculture might be of value to those that listen and watch your show.
Right on. Well, Sean, appreciate you being on. Looking forward to having you again here soon, and we'll talk to you again then.
Sounds great. Look forward to it, Casey.
Right on. Up next, we have Aaron Fennell and Kyle Schneider from Stotz Equipment to talk about what's going on in the world of row crop tractors. So stay tuned.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
And welcome back. Thanks, Sean, for that commodity report. I've got Aaron Fennell back here to talk about what's going on in tractors, as well as Kyle Schneider from Stotz Equipment. And I've known Kyle for, I don't know how long I've known you, Kyle. A long time. Probably longer than you wanted to know me. I can tell you that. So it's
close to it.
It's been a while. So it's a, I don't know, we probably known each other, 10 years? 10,
at least 10, yeah.
Like yeah. And so we go way back to first Moving Iron Summit, actually, where first time I met you and did that. And so, Kyle, go ahead and give a little bit of a background on yourself, Stotz Equipment, what they are, where they're at, and all that kind of stuff.
Sure. So Stotz Equipment, we're a John Deere dealer here in the Western U.S., covering 8 Western states. We've got 25 stores. Recently, we just partnered with Premier Equipment up in Ontario, Canada.
Nice.
So now we're the first John Deere dealership, from my understanding, to be on both sides of the border in Canada and U.S., basically. So with that partnership, that puts us well over 30 some stores right there. I think they just acquired a few up there. So now we're up to 10 stores in Ontario. So I'm the used equipment manager here, covering everything from large row crop production ag equipment down to the little tractors and cotton pickers down south into Arizona. So I've been with the company just over 12 years now, and just enjoying these ups and down cycles that we're all enjoying right now. So
yeah. I don't know what ups you're seeing, but there's a lot of downs.
Oh yeah.
Now it's leveling out. If you look at where things are at, things are leveling out. Aaron, how you been, bud?
I am terrific, sir.
Outstanding. You keeping everything nailed down there in Box Butte County?
Well, that is another challenge.
It is windy today, isn't it?
If anybody's short on carbon credits, I invite them over, bring a fishing net, and just pull it in the front yard.
Yeah.
You'll get all the shucks you can possibly pull.
Goodness, man. I think the airport here in town, Scottsbluff, had a 70-mile-an-hour wind gust. So things are good today.
It's literally just a steady building vibration.
Right. Well, it's spring-ish, time. Right. It's the break between winters, right? You got first winter, second winter. It's the one in the middle.
Yeah.
And so it's 65 by 65. That's what it's at right now. So
that's exactly what it is too. 65 by 65.
Yeah. So it's crazy. Crazy things. Speaking of crazy, if you take a look at what's going on in the tractor market right now, I watch the tractor market as close as anything, because to me, that's where I mean, everyone watches the combine market, and everyone wants to kick the combine market because it's always down, right? So you don't ever want to be on the wrong side of the combine marketplace. But tractor markets, to me, you really see the ups and downs of the market as far as I'm concerned. Like if you watch when things really take off, tractors sell really quick. When things really slow down, tractors just slow down a little bit. Like you can see, like they don't stop by any means, but there's a contraction there, right? Mm-hmm. I talked a little bit about 2024 order writing periods and how 25 deliveries were going to be off. Obviously, you can go to look at any news cycle out there, and you'll see every article from every manufacturer talking about how they're off this year for deliveries. But if you watch where things are at right now on the combine, or I can't get it out of my head, tractor market is right now. If you watch where those things are at, it feels like that's starting to kind of plateau a little bit. Supply is starting to plateau a little bit, and we're starting to see some curves. Machinery Pete was on just a minute ago talking about he's watched a couple sales that had some really strong tractor stuff sell today, some high tractor prices sell today. Kyle, looking at your marketplace and what you see happening, now you've got metric John Deere tractors as well as standard John Deere tractors that you have to worry about. When you're looking at that stuff now, like what do you see? What do you see happening in your marketplace? What's your feel for the tractor market? Do you feel like we're plateauing a little bit and starting to see some change a little bit, or what's your thoughts?
I think there's a plateau in certain aspects of the market there.
Okay.
I mean, if you're to take row crop tractors, for instance, and you break it down into certain segments, whether high horsepower, low horsepower, you can see some plateauing there. You can see some gains, and you can see some dips in that as well.
Sure.
Specifically, I think if you're looking at the 300 horsepower plus, we're still seeing some decent demand on that stuff. Not fantastic, but it's decent, and it's moving stuff. When we get into that lower under 300 horsepower, it just seems like demand just dropped off, and we're starting to get an influx of equipment sitting on the ground and got a lot of paperweights to a point this right now. So
yeah.
So I think it's kind of it's a weird time, I mean, 8R, specifically John Deere 8Rs, have historically been a great moving tractor. Kind of like I always call it my bread and butter, because that's the stuff that's going to move day in and day out, no matter what time of the year it is. And we've kind of gone through some ebbs and flows of what's going to move and what's not in terms of the horsepower range. But it seems like that lower horsepower range is just dropping off right now. The higher horsepower range is just kind of your steady and bringing in what you want. When I look at other things, it seems like it's plateauing overall to a point maybe. But I'm really waiting to see when we get out of this third and fourth winter and spring finally hits, if things change a little bit for us, because I know I've talked to guys across the country, and they get 60-degree temperatures and guys are antsy to get out in the field, and then phones start ringing. And all of a sudden the next week we're down into sub-zero temperatures and snow's coming in and they're hunkering down, and it just seems like it's a bipolar winter this year. So I don't know what's going to happen, but I'm really waiting for the spring to hit to see if things change for the most part.
Yeah. No pun intended. I like that. Bipolar winter. I like that. That's nice. I dig that one. All right, Fennel. So you're looking at the same situation all over the place. It feels like people are kind of perking their ears up a little bit right now, looking for tractors. That being said, price still makes a big difference, right? So you're looking at where things are priced at, how things are pricing.
Right.
We've seen a lot of people on Machinery Pete's website now where you're seeing a lot of reduction in price, like repricing of equipment, not so much just like, hey, we're going to have this for just knocking stuff off, but you can see where things have been, repriced throughout this, especially I think it feels like this last 2 quarters really is where you've seen a big chunk of this repricing thing happen. So I guess, Aaron, as you're looking at this, you're dealing with people all over the country all the time, all over the world for that matter. As you're working with them, what do you see happening? What are some of the, what are some of the attitudes you're seeing right now when you start looking at tractors? Are you feeling that, hey, baby, it's times are coming, we're going to get some update that tractor?
Yeah. Yes. Tractors, high horsepower row crop tractors, to Kyle's point, the 3+ range, red, green, dark green, they have really broken loose here within the last 2 weeks. I would say maybe that first weekend of February was a little quiet. Mm-hmm. And then the last 2 weeks has really opened things up. Ironically enough, I would agree with Kyle's point on pun intended. There's a lot of fair weather buying right now.
Right.
You know,
Yeah.
Even a 65 by 65 day, the phone's ringing because
Right.
we're 65.
Right.
So there's a lot of that. Now, conversely, last week, when at least in our region and virtually the high plains was 20 degrees below zero, that would be hunker down mode, but I think it was so hunker down mode the phone was hot.
Yeah.
So and that makes sense too. You're gonna your nice days, you're gonna get some fair weather buying, if you will, because guys are thinking and you feel it. It's just part of you. And when they're hunkered down, stir crazy, back to that point, that has an impact too. The biggest thing that I'm seeing, I would completely copy Kyle on as far as tractor segments go. Over 300, which was the sad face for the last 12 months, has become the bright spot, and the sub threes are hurting now, slowing way down. And it, I realize we're talking tractors, but it's surprising how many different segments are slowly shaking loose, if you will.
Yeah. Yeah. I kind of, earlier when Greg and I were talking, I really kind of put it like, you got this sludgy, heavy mud at the bottom of the well, and you've got to get that churned up so you can get to the water below it. And I think that's where we're at right now. You got to kind of churn that up. And one thing I talked with him about, and I love your guys' opinion on this, is I kind of look at where the time period that we're at right now is like if you kind of go back and look at 2008, 2009, where they were at coming out of the Great Recession, every corporation on the planet just pulled back on what they were doing, right? I mean,
right.
Manufacturers slowed down, everything, even the farm economy was still pretty strong. Everybody pulled back, delays coming out of the factory, lack of equipment coming in. It opened that door for that 2010, 11, 12, just catapult run that we saw happening, and then you throw, $7 corn on top of that and it just, went nuts. But I mean, leading up to that whole time frame, that 2010, late 2009, 2010 time frame, your choice was a late model low hour tractor. If you remember, if you wanted to buy something, there weren't that many new tractors sitting on the lot for sale. There were some, but it wasn't like it was in 2011 or 12 where, you went out and ordered everything and got everything. And then you went and ordered 2.5 times more just because, you could sell it. There was a few things sitting there, but that late model low hour tractor really took off, and you watched how that moved throughout that time frame. It moved into 2009, right? And 2010, the order board started picking back up. I kind of feel like that's where we're at here a little bit right now, is where we're seeing this. Even if tomorrow the manufacturers sit back and say, what, guys, we're gonna go back to 100% production. We're gonna have, we're gonna run 24 hours a day and all the stuff that was there. They just can't do that overnight, right? It would take them a year and a half, 2 years probably to make all that come together like it's supposed to. That's where I think we're at. We've got this bereavement a little bit of this pressure from the new side that's going to open up the door to the used side and help kind of bring those used prices up to where when the new stuff does hit back again, hopefully, knock on wood, a lot of this 1 to 3 year old stuff that everyone's kind of setting on right now, this $500,000 to $300,000 stuff that everyone's setting on, that stuff kind of shrinks down a little bit, opens that door so that some more of that stuff can come in and start working your way back through as everything kind of flows out. Feels like that's happening to me. We'll see what happens going through 25 and 26, but there's nothing out there that I'm looking at right now that says that prices aren't going to at least continue to increase incrementally. I'm not going to have a huge jump by any means, but you're going to see little movements here and there. There'll probably be some backslides, but there's going to be some upward trends. Kyle, as you look at your demand at your dealership at Stokes, are you feeling more confidence than you felt maybe 3 months ago?
Yeah, a slight amount more confidence. I mean, when I look at things like where we're pricing our equipment at, I think everybody's trying to strategically hold their prices to a point just to kind of keep them up and keep it where it should be for the market.
Yep.
Not, try to hopefully drop too much. I mean, granted, we're all still trying to move equipment and we're going to adjust prices up and down across the board, but we're trying to keep them up as high as possible for that exact same reason, Casey.
Right.
I mean, we want to, try to limit the losses that we're going to have in the next little bit, but I do think that incrementally we'll start to see some increases to see that balancing out that we all really need and desire right now.
Yep. And I think you're right too. Another thing too is, sliding prices are bad for everybody, right? I mean, whether you're buying or selling, it's bad both ways. It doesn't help anybody.
Yeah.
So trying to maintain that market integrity, I guess the best way to put it, is what you have to do. Now, what that market integrity is different, across different points of time, but trying to maintain those points is very, very, it's a very strategic thing that you need to have happen for sure. Yeah.
Well, and even within a segment, we're talking Kyle and I, both deer guys, even within 8Rs, I'm going to approach 250, 280, very different than 340, 370. So even to the point, everything is almost model specific as far as that maintain and try to preserve what market there is out there,
Yeah.
Yep.
And to your point, Casey, it does feel very 08, 09-ish, because back then we had, we were coming out of the end of the 90s, early 2000s were way worse than now. I mean, honestly, commodity prices and farm income and all that. So we're in a little better spot now, but back then, because we were coming out of such a slow climb from that 1998 to 2000, just basement we were in.
Yeah.
It was such a slow climb. We didn't have any of this. Oh, we woke up and corn is $7 today. Everybody go buy something new and buy 7 of them. Yep. We didn't have that. We had the nice, steady, okay, now it's 06. We can order one of these, you know, to the point it was almost a perfect storm backwards of where we are now, that we were really climbing in September 09 when the 8R came out. Perfect timing, just gangbusters. And then slowly after, it was soft, but it was never the percentage or level of healthy to soft like we're seeing now. That's the difference. And not so much the dollars per piece, like we've talked, Casey, through the last 2 years, about the topic of the glut.
Yeah.
Not so much that part of it, but just the generalization of the business sense.
Yep.
Mm-hmm.
For sure. Well, it feels like to me, go ahead, Kyle.
Well, I can say, it even reminds me of like 2012 to 2014 when things tanked there as well,
Right.
There's a lot that I'm seeing in this market today that is very similar to 12 through 14, even 15. And, it's kind of, I started with the company right there in 2012. So not a great time to come into the used market and try to sell this crap. So I shouldn't say crap, just the equipment, and to work through that and then to see a nice up, shift in market, see some good times, and we're back down there. It's shocking to me how there's a lot of similarities between the two. Going into even what Aaron was saying, even going back to 2008 through 2009, I wasn't here in the industry, but I heard about it. I knew what was going on there. It's just that's that funny cycle that we all have to work through. And but you think that over time, and I think as dealerships, doesn't matter what color, we've all gotten smarter over the years, because even when you look back in the 90s, the early 2000s, how the market changed and how it did it back in 09, back in 2012 again. Now we're here. Each time we go through this, it seems like we got a little bit smarter in how to better present ourselves, not present, but position ourselves for what we need to do with the new and the used to move this stuff.
Yeah.
And
Right.
granted, it is bad. There's those that don't open their eyes to it to see what's happening here. We see some crazy deals happening out there, but it seems like as a whole, the industry has gotten better and better over time. Unfortunately, it's just not where I think it should be,
Right.
Seems like we're still in our infancy trying to figure this whole stuff out as an industry as a whole. But yeah.
Yep, that is a very true statement. You sometimes you drink too much and you can't remember what you did the day before. You know what I mean? So I think that happens sometimes in this industry. So it's a good time nonetheless. So probably good place to stop. Kyle, folks want to reach out to you and get more information about what you're doing at Stokes. What's the best way to do that?
Email or cell phone, basically, kschneider@stoteseq.com or my cell phone 801-573-2850. So
Right on. Aaron, folks want to reach out to you. How can they do that?
Several on X, fairly regular at Aaron Fintel. You can call me or text me 308-760-1193. Those are probably the best two ways.
Right on. Casey Seymour, you can find me anywhere at Moving Iron LLC or Moving Iron Podcast, either one of those places, Facebook, X, Instagram, TikTok. I don't know, everywhere else on planet too. You can find me there.
Big Chief Tablet.
Big Chief Tablet. That's one of my favorites. Plus a crayon. You got to use a crayon or you can't. Doesn't work.
Yes, sir.
Check that out. I got a new thing I'm going to start doing called Trendline Tuesdays. I'm going to pick a topic every Tuesday, put it out there as far as kind of historically what we've seen happen over the last 3 to 5 years and where we're at today and how that correlates. So look for that every Tuesday to come out and we'll have that up and go from there. So special thanks to John Deere for being the sponsor for this edition of the Moving Iron Podcast. So with that, I'm Casey Seymour with Kyle Snyder, Aaron Finnell, Sean Hackett, and Machinery Pete. Let's move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.